Looking into our crystal ball, what tax measures might we see in Canada's 2018 budget? A goal for our government is to eliminate poorly targeted and inefficient tax measures, particularly those perceived to unfairly benefit the wealthiest Canadians rather than the middle class and those working hard to join it. This goal led to the proposals that address tax planning strategies using private corporations, released in July. Several steps have already been taken, and we will hear more on this. For example, the government announced revised measures that limit income sprinkling effective January 1, 2018, that will be legislated as part of the 2018 budget process. As well, the government is proceeding with changes to the corporate taxation of passive income, targeting perceived tax advantages achieved by using low-taxed business income to accumulate a passive income portfolio in a private corporation. Draft legislation implementing these rules, which is expected to be lengthy and complex, is expected in the budget. However, the government has promised that incentives will be maintained so venture capital and angel investors can continue to invest in innovation. Perhaps the budget will tell us how this will be done. Our government also promised to consult with Canadians on tax changes to facilitate intergenerational business transfers. The budget might reveal specifics on this consultation process. Of course, it's also possible that the budget will introduce other ways to target tax planning using private corporations. So what else might we see? U.S. tax reform calls for reducing U.S. corporate income tax rates and easing the personal tax burden. The big question is how our government will respond. The budget might tell us. And tax simplification is high on the agenda in the U.S., as well as in Canada. Recent Canadian budgets have eliminated some tax credits, and we may see more streamlining in our 2018 budget. To make the Canadian tax system fairer, the government has continued to close down what it perceives as loopholes. The budget might include more of these so-called integrity measures. A hot topic is base erosion and profit shifting, known as BEPS. In general, BEPS refers to tax planning strategies that take advantage of differences in national tax laws to shift profits to low or no tax jurisdictions. Addressing BEPS aligns with our government's objectives to improve fairness and provide a competitive environment for Canadian business, so the budget might provide guidance as to how our government will deal with BEPS. Also watch for whether the budget will add to the global discussion on the taxation of the digital economy. The government has been collaborating with the provinces and territories to put in place a national strategy to ensure transparency of corporate and beneficial ownership. It has also been examining ways to expand the tax reporting requirements for trusts, in part to enhance the collection of beneficial ownership information. Draft legislation to implement these measures is expected in the budget. Some tax changes in the Liberal Party platform have not been implemented, and therefore could be in the 2018 budget. For example, the Liberal Party had promised to modernize the rules for the charitable and non-for-profit sector, and to introduce a seniors' price index to increase old age security payments for inflation. Perhaps these pledges will be fulfilled. So what's the bottom line? Significant tax changes may be coming. Stay tuned, and if you have any questions, please give us a call.